Enjoy the video.
I've been ever since the BlackRock filing last June. Bitcoin, I think, was around 30,000, and since that filing, there was more and more good news, and it was sort of like a buy the rumor, and that drove the price up 60%. When they approved it, there was a little bit of a sell the news event there, but then the inflows were so strong. Right off the bat they were strong, but I expected that. But then they had this really big second wind, and it's really rare, even for a hyped up new launch. Normally there's fanfare the first couple days, then it kind of like settles into an equilibrium, and then maybe down the line it catches fire again. Who knows? This one like caught fire like in the fourth week and went straight back up in terms of flows, and I think that helped the price kind of come back, because in my opinion, it feels like there should have been more pullback after the sell the news, because you go up 60% in anticipation. Normally, there's a sort of come down that's way deeper than we saw. So I think that the robustness of the ETF flows helped sustain the run up and then some. And so I do think it's very related, because there hasn't been a ton of other catalysts in the Bitcoin market. Some have even argued that a lot of the narratives are kind of gone. In fact, this use of a currency. So I think that the ETFs were massive deal, and they should be. ETFs are the preferred vehicle of most professional investors and especially advisors. They're fast, they're good, they're cheap, they're easy. It's like putting your band's music, on Spotify. You are where the fish are biting. So just by having a Bitcoin ETF, it opens up a ton of new investors. So I think the price largely is moving off the ETFs. I've seen some days where the ETF's taking money, the price still sells off. So remember, ETFs only own 4% of Bitcoin so far. There's many other people who can move the price, but I say it seems like half of them never trade. So the float is smaller, but still, ETFs are still a minority owner. But they're the new kid in town. They're the ones that have been like the positive catalyst. So I would say for now, yeah, the ETFs are a big deal. The launch was really tremendous. It's sort of cooled down a little bit the last week, but overall, we're talking about $12 billion in net flows and $55 billion in total assets. Those are numbers that our predictions had those numbers after 12 months, not 3. So that just tells you where they are. And I thought we were one of the more optimistic teams out there. So they've kind of already reached our 12-month predictions in 2.5 months. I think, though, what's interesting about this era of Bitcoin, it seems like the fourth time this thing has survived like a world war. I mean, Bitcoin is like a cockroach in terms of its ability to like come back from the dead. And that's why I respect it. It isn't going away. I think it was supposed to go away 3 times now. So I think now we're at this more mature level of like the mainstreamification of Bitcoin. So I think institutions don't need to wait for a rally. I think they're sort of like looking at everything and going, okay, it's not a currency, but 2 things. One, we don't want to kick ourselves if it goes to $1 million. I call that like future FOMO cure. And number 2, everybody's sort of awakening the fact that the dollar has been devalued and inflation can steal your money and you get less of your actual returns. Your real returns are less than what your portfolio shows. And this could be a way to protect from that, because it's, again, a store of value. So I think for those 2 reasons, even if people aren't true believers, they might be interested to allocate to it. And so I think that's pretty powerful. I think that it didn't have that before. And I think the ETF and having people like Larry Fink, who is the head of BlackRock and Fidelity, and these gigantic, massive American institutions, the asset managers, having them involved and sort of like backing it is a big deal.
For the move to new all-time highs. Here is Eric's response to those claims.
No, because the way ETFs work, these companies they're like Vegas. They don't want to be like where the Vegas has a sports book. They're not taking a side. They just want to make the small big in between the 2 sides. These companies are just like that. They don't want to be long or short Bitcoin. So BlackRock was not going to buy Bitcoin before. They were simply, so when they launched it, they lined up an investor, perhaps, or a couple, to give them money on day one. And then as they went forward and got more flows, every time they get new investors, they go buy the Bitcoin. And if an investor leaves, they sell the Bitcoin. They do not want to end the day long or short Bitcoin. Neither do the market makers. they're just like a casino in that way. They just take a small vig, which we call the expense ratio, or in market maker's case, the spread. And it's a tiny, tiny little vig. I think it's a fair trade-off for the outsource, to be able to outsource all this to somebody else. And so they would never buy it before. The run-up before, I think, was a lot of crypto people and hedge funds. A lot of hedge funds bought the discount in GBTC. It was trading way below its NAV. And that discount was going to close if it converted. So a lot of prop traders were buying the GBTC discount, which to me probably also lifted the price of Bitcoin. So that's who I think bought it before. It was all speculators. It wasn't the asset managers launching the ETFs. They only bought Bitcoin when they started to get customer orders for it. All I know is that over time, you're going to see inflows and outflows. Look, anybody could see this if you look at like GLD or SPY or even Vanguard funds see outflows. That's just how ETFs operate. But what I was trying to say was, A, don't let one outflow day make you cry like a little baby. Some of these people, I'll be honest, like they want like 10% returns every day. And when they get nice rallies, it goes on for like 18 straight days.
Yeah.
On the 19th day it goes down, they flip. And it just reminds me of a little baby, like a spoiled little baby. And I'm like, listen, relax. Fine. You're up like, as you said, you're the best performing asset this year. You're running circles around the NASDAQ 100. What else do you want? So ARK has one outflow day. The 10 of them still saw net inflows. ARK, $87 million. When ARK has seen 50 days of inflows out of like 55, it is no big deal. Like, in fact, that's why I was saying, just relax. What you'll see is people go in and out, but over time, categories grow in net positive. So, and I see the same thing happening here. And there could be a downturn where Bitcoin's down 30%, and maybe 6 out of 10 of them see outflows in a week. Well, it's okay. Over time, as the category builds and ETFs are popular, the category will grow. And generally, ETF investors are stronger hands than people think. I do not see 100% of the investors running for the hills if Bitcoin goes down 30%. I bet you'll see some people, maybe 10%. Right, 10% of 55 billion is 5 billion. So 5 billion outflows in a week. People are like, oh my God, but it's not that. It's okay. Over time, though, I see that 55 billion slowly increasing, and most of the people are going to stay. ETF investors. Here's why: most ETF investors are 60-40 types. They have stocks, bonds, and they have it saved for retirement. And they're going to wait 30 years for that to grow like a tree, because it's got to compound, which is where the magic is in investing. But they're bored. So they leave that alone, and then they have a little allocation, which I call hot sauce. And they'll go and they'll find stuff that makes their blood go, gets their blood going, or they feel like is like going to make them have FOMO. And Bitcoin, to me, is where this goes. It's in the hot sauce bucket. And because you have all of your serious money covered in the 60-40 S&P 500 kind of portfolio, you don't have as much jitteriness with this little allocation to Bitcoin. That's why ETF investors tend to be a little better behaved.
Meanwhile, 3 advisors